Hi, and welcome to Training Shorts by Realty and Insurance U. My name is Sadiq, licensed real estate broker and licensed real estate instructor. And today I want to talk to you about the rising interest rates, right? The interest rates are rising, which causes some different challenges. And I want to share with you perhaps some strategies that you can use to deal with those challenges. Because you don't want your buyers telling you, I'm going to wait for some date in the future that we're not sure of. We want our buyers to buy now. So I'm going to share with you a strategy and perhaps it'll benefit you. I want to take a look at a scenario. So now I'm looking at this mortgage calculator. Let's take for an example, you have a person that wanted to purchase a property for $300,000. Put in 5% down. And the rate at the time, let's say it was 3.5%. When I calculate that, now you're talking about $1,279 that the person's principal and interest payment was at that time. But of course, perhaps the buyer procrastinated for some reason, maybe good reasons why they had to wait. But now the interest rate has got to a point of being about 7%. And again, the interest rate is probably changing as we speak. But just for an example, a rate of 7%. Now, when I calculate it, now that principal and interest has gone up to $1,896, $600 more than it was not too long ago. And when you share that with the buyer may say, "I'm not doing that." If they're not going to do that, then there's talking about let's wait. But let's look at how we can make this work. When this scenario occurs, if you have buyers and you in this situation, the first thing you want to do is find that target purchase price. And when I say target purchase price, I mean, what purchase price can my buyer have that will give them the same amount, about $1,279? So they'll feel the same as far as the monthly payment. I've already worked the numbers out, and that will be $202,000 at 7%. $202,000 at 7%, that's $1,276. So that $202,000 at 7% will give them the same monthly payment. So you have some choices now. I'm going to go to this screen. You have a few choices. Again, we talked about it. We had the purchase price $300,000 at 3.5%, principal interest $1,279, but now because the buyers waited, the interest rates have skyrocketed. Now you got $300,000 at 7%. The principal and interest is now $1,896. It's up to $600, $600 or more. And the buyers are not interested in that. They're telling you they want to wait. So at that time, you get that target purchase price of $202,000, $1,276, almost the same thing. So these are the choices that you have. Number one, you can go to the seller. You can go to the seller and you can let them know that, hey, listen, I know you were getting offers for $300,000, but at this point, what we can offer you is $202,000. Now, that's not going to go over well, okay? It's not going to go over well at all. It's an option, but it's not going to go over well. Or number two, you can talk to your buyer. You can tell your buyer, hey, listen, I know last month you qualified for $300,000, but this month it's $202,000. So now I can look for some properties for $202,000, which will keep you in the monthly payment of $1,276, $1,200, same thing. Not a good conversation, especially if you've already shown them $300,000 houses. Now you're going to show them $202,000 houses. That's going to be a real challenge. It's not going to be a good conversation. Or we can do number three. We can look at doing rehab loans. FHA 203K, home style renovation loan. There's a few others out there. Now remember, what our target price is, $202,000. See, $202,000 will put our customer in the range with the current interest rate as if it was before, as we talked about before. So what we're gonna have to do is find a property where the purchase price is around 162,000, and we can rehab the property for about 40,000. This is a sample. All in 202,000, and guess what? The principal and interest is 1276. If we can find that right now, our customers can buy right now because they'll find a property that's beat up. Because now what's going to happen is we're going to go from looking for a house that's in very good shape to a house that's the worst in the neighborhood. Need a new roof, need new carpet, need new everything. We need to rehab the whole house. So we get a purchase price of 162, rehab the house. They have a brand new house, all in at 202. They're at 1276. The question is, where are we going to find properties like that? Let me show you how to quickly find properties below market value in the neighborhood where your customer is searching. So when I go to RPR, I'm going to go to Duval County. And then what I'm going to do is I'm going to be here on the sales tab for sale active. So I'm going to leave it at single family. I'm going to leave the any price right there, 3 bedrooms, 2 baths. The next step that you want to do is click on more filters. When I click on more filters, I'm going to come down to where it says price to estimated value percent. And I'm going to click on the first one, which basically what it's saying is that you're going to find properties that are below the market value, 0 to 80% below market value. Right now I have 16. So I'm going to come over here and click on update and search. When those properties come up, the next thing I'm going to do is come down to a particular neighborhood. I have a property that I want to target. And I'm going to come up to where show geographies here. So when you have the customer, they want to live in a particular neighborhood, you want to find properties below market value in that neighborhood. So I'm going to come down and click on intermediate neighborhoods. And my customer want to stay in this neighborhood right here. Here's the property. It's new on the market. I'm going to click on it. And let's take a look and see what we have here. We have a property. Here it is, that same 300,000 what I did our scenario, correct? We have 300,000 here. I'm going to click on view details because I don't rely totally on automated values. I like to click on view details. View details will show me all of the properties that were used to come up with that automated value. And sometimes the numbers are good, sometimes not. So what I do is I go in and find some comps to match up for. I got a 421403. I know I can come down. Here's a 421489. Hey, for 300,000. Hey, that's a good number. So I'm going to come out of there and come back. The next thing I'm going to do is look at the condition of this property. Perfect. Excellent. The property is damaged exactly how I want to, because remember, I'm looking for the worst property in the neighborhood. The worst property in the neighborhood so that I can buy it below market value. Now, when we look at this property, you'll see that they have it listed for 218,000. But what do we have to get it for? For it to work and for the customer to be in the same position as if they were going to buy a brand new house at 3.5% for 1279. I'm going to need to offer 162,000 because remember that 40,000 not going to the seller. That's a part of the rehab budget that'll be factored into that renovation loan. You may say, well, my goodness, 162, that's a far cry from 218,000. Absolutely. But let's look at this scenario. What if we give them the 218,000 that they're looking for? I come back. Here's the RPR property example. Purchase price 218,000 plus rehab, all in at 258,000. The principal and interest payment at 7% is 1,580, which means that it's only $300 more than the original 1,279. So it's only $300 more. Plus, remember when this property is rehabbed from top to bottom, it can appraise for about 300,000. So you can let the customer know, yes, it's $300 more a month, but when you finish, you can walk into a home with perhaps $35,000, $40,000 of instant equity once you move into the property. And hey, if $300 is still a challenge, meet in the middle. Maybe get it down to $150 extra and still have that potential for equity. So there's some opportunities. You want to try, if your customer is talking about waiting to some time in the distant that we don't know what that date is going to be, perhaps present to them a rehab loan, because guess what? Those properties are out there. These are actual properties. These are actual opportunities. Share that with your customer. You want to get in contact with some lenders that specialize in rehab loans. Some of them specialize in it. Get them on your team, and then try to go after some of these properties that are in bad condition. I had a situation some years ago. I had a customer that did the same thing. His pre-approval, he wanted to stay in this particular neighborhood, but he did not have a pre-approval to buy those types of properties. So I found a property that was beat up. Remember, they bought the property, fixed it up. Once they fixed it up 4 or 5 months later, they called me. They did an awesome job with the property. Property went from that raggedy property that we got to this beautiful property that they was able to move into in the neighborhood that they want to move into. And you can do the same thing if you use rehab loans as an option in this market, especially when interest rates are increasing. Thank you for your time. I hope this information was beneficial to you. Thank you for participating in Training Shorts by Realty and Insurance U. Have an excellent day.